Good afternoon. This is Chris Robinson Ag Marketing with today's post-close grain and livestock comments from Monday, November 3rd, 2025. December corn finished up 2 3/4 cent. March corn finished up 2 3/4 cent, 446 3/4. I've got a lot of guys that are rolling their D's to March. D's March is trading around 12 cents now, 12 and a half. November beans, they're in delivery, but they did trade as high as 11.20. Settled 11.19 3/4. I'm looking at jam beans now. They finished on their highs. 11.35 3/4 was the high. We settled 11.34 1/4, up 19.20 cents there. 19 cents. A great marketing opportunity for all those contracts. Big, huge retracements that we watch. If you go back for the entire 2.5 year down move, we've clawed back 50% of that. We're looking at some contracts clawing back 62% of that. Those are big areas. And, if you're a producer, who I'm talking to 90% of the time, this is a rally that you either need to sell or reward. On this way up, we've been making cash sales. In my program today, we finished up. Sold 100% of all guaranteed 2025 soybean bushels. So what does that mean? Well, if you grow 100,000 bushels and you've got 80% coverage, 100% of your 80% is 80,000. So get those things marketed. If you're going to hold on to the other 20% to see what happens, I totally understand. We're going out to either January or March and protecting this rally on paper, because if it turns, it turns. You don't want to watch a big chunk of a $1 plus rally fizzle because of somebody's hurt feelings. Some politician says something. The interesting thing is this: we had this rally despite the fact that China bought 10 cargoes of beans from Brazil. They did buy some more from us. There's no confirmation yet as to when they're going to actually get the 12 million metric tons they promised us between now and the end of the year. That's going to be a lot. It's going to be interesting to see if that happens. And honestly, the commitment they have over the next year to 3 years to go back to 25 million metric tons, that's what they've always bought from us. So just take that for what it's worth. And promising to do something and doing something completely different. Right now, the growing season down in South America is pretty much perfect. They're expecting rain here for the next couple of weeks, so there's no weather issue down there. Will we get one? I don't know. Generally, we do. Back here at home, this is one of the first times in a long time that we didn't get a weather scare this year. So maybe we're due for one, maybe we're not. In the meantime, we got to deal with reality. Reality is this has been a heck of a rally. A month ago, it was all over the news how terrible soybeans were doing, this other thing, and to claw back what we've clawed back is just a great opportunity. And I'll tell you this, on the way up here, yeah, we've been making sales, but we've been re-owning it. If you're selling into $1 or $1.25 rally, that's where you make your money if you're a producer. If you're concerned that it's going to rally another $1 next month, we've been buying weekly calls, options for 2-3 weeks, options for 2-3 months, that allow us to stay in the game after a sale. But the key is this: if you've got a $1.25 profit that you can sink your teeth into, that's real. I would say, either protect it with a put. If you can't bring yourself to sell it, then get a substitute sale on paper. Okay. Or make the sale and then re-own it with a cheap call. And I'm talking about, I've got calls I bought last week because guys, we were selling in that rally. We had no idea we were going to come in this morning and continue to go higher. We were worried that possibly we wouldn't get a China deal. That was a risk, last week. If he walked out of that meeting with a frown on his face, we'd have been a lot lower. So on that rally heading into that, we made cash sales, and yeah, we re-owned them. I had some 7-8 cent weekly calls that have done a hell of a job here, keeping us in the game. So, and that's the key. But hindsight's always 20/20. We wanted to make good cash sales, right? And in a year where we had basically a dollar trading range until last week, we had a high of 10.79 3/4 and the low of 9.71. 10.75 and 3/4 and a low of 9.71. We had a $1.04 trading range all year. Where did you do those sales? That's the key. And when you're at the top towards the harvest here, the highest price we've had in a year for the jam beans, March beans, I believe the highest price we've had for a year in Novi beans, the highest trade we've had in 16 months in January beans. If you don't do something about that, I think you're making a mistake. I'll just leave it at that. Okay. And wheat, actually, despite the fact that people didn't really maybe take it 100% seriously, China asked for some wheat offers. I thought it was more just a courtesy bid because they were buying beans from Brazil and they didn't want to have somebody say, well, you're not doing anything for here in the U.S. At the end of the day, it's a great rally. It's given wheat. I'm looking at, March soft red wheat. It's the highest price in that we've had since August. Take advantage of it. A 3-month high. Not that long ago, back on the 14th, right? 3 weeks ago, we were at a 5-year or contract low. Take your pick. We were down at 508. So we've gone from 508 and a half to, we settled at 557 and a half, but we traded as high as 558 and 3/4. So that's a 50-cent rally. That's something that if you're storing wheat, you got to take advantage of it. If you need cash flow, I always like selling into 50-cent rallies. If you're worried it's going to go higher after you sell it, go buy yourself some cheap calls on a 50-cent rally, hold back a dime, stay in the game. But this, from a producer standpoint, it's been a very difficult marketing year. It's been a really difficult 2.5 years. So to get these bounces like this, take advantage of them. That's all I can say. And making a sale is not calling a top. That's why we own with calls. I can't stress that enough. You're not calling a top. People that try to call tops and call bottoms, I've been doing this for over 30 years. I stood on the floor of the Board of Trade and watched hundreds and hundreds of people come and go. They're on fire for 6 months, and then they're driving a cab 6 months later. This is an unforgiving game where if you get emotional, if you start pounding your chest like Tarzan, there's a sniper out there that will take a pot shot at you, and you better have your helmet on to protect yourself because this is it's no joke. When this market turns, you can leave a lot of money on the table. And farmers and producers, you are speculators. The only thing is you are always bet long. So absolutely positively, when you have 16-month highs, you better do something to get after it. That's all I can say. And if you're looking for somebody out there that's going to tell you exactly where the high is and exactly where the low is, good luck. There's magazines out there full of thousands and thousands of back-tested trading programs, and it just doesn't exist. What you want to try and do is catch the meat of the rally, and you have to know where your profitability levels are. That's the key. Nobody needs practice farming. And on that note, we're already looking at 2026 beans. 2026 November beans at 11.14 today. A tremendous, tremendous rally out there as well. Now, do people not make money at $11 beans? Is that going to be an issue? Because it's the highest price we've had out there in beans since July of 2024. Okay? And if you look at the big move, the big, huge move, in 2022, Christmas time, this bean contract, the November 2026 bean contract was trading $12.41. I remember because I had guys that didn't want to protect $12 beans. And then we bottomed out here in December of last year at $9.83. This year we traded as low as $9.93, right? So, and then we were there in April on the first tariff spook. So to get this type of recovery, you're getting an early blessing for soybeans for next year. And again, making a sale or making a hedge, you're not calling a top. You're just making a good business decision. I can't stress that enough. And lo and behold, if you're looking at 2026 beans, we are in the midpoint of that 2.5-year slide. We're right back in the middle of it. So it's ironic that, just a month ago, you had people, New York Times and CNN, very, very concerned. They had suddenly woken up to the fact that, soybeans were cheap, and the world was not looking too good. So I think it's ironic that maybe those guys helped put the low in. Again, can we go higher? I sure do hope we go higher. Okay, but anybody out there that promises you that, don't worry, we're going back to $12 beans, ask them, okay, we're at $11.15 today. If we don't hit $12, will you give me that 75 cents? And I can guarantee you that the person will say no. So reward this rally with a hedge. I know most guys don't want to make any cash sales this forward, but if 11.13 works for you, depending on what your basis is, nobody needs practice farming. And again, nobody's guaranteed that their cost of production gets covered. But if 11.15 doesn't work for you, you better know what that number is that works for you. Same thing for D26 corn. We're at 467 on the board. What price do you need so that you're not losing money farming? So this is going to be a spreadsheet issue. But the good thing is it's heading the right way. So reward it. And finishing up here real quick with the cattle. A nice bounce back in both fat cattle and feeder cattle. We're going to look and see is feeder cattle going to be able to claw back and go up and get into the gaps that we had from the last 8-day correction. And we dropped 16%. We dropped almost $60 in the March contract from the high, which was on October 16th at 378, to the low, which was a pretty devastating low. We traded to 317 double, right? That caught a lot of people by surprise, I'm sure. That was, basically a 3-month low, but a huge haircut revenue-wise, and we bounced. So can we go bounce and go higher? I sure do hope so for anybody out there that needs to lock in higher prices. But the one thing I do know is that you don't want to let anything get below 320. We settled today at 332. Is that still worth protecting? I think it's worth protecting. Fat cattle finished up 2.5 at 232.20. Again, is fat cattle going to turn around? There aren't as many gaps on the chart there for fat cattle, and we did have a smaller correction percentage-wise. At the end of the day, the fundamentals haven't changed. There's still not enough cows up here. We're still going to find out, are they going to open up the Mexican border or not to let cattle up here? The screwworm has been one reason we had the big jump in prices, because that cattle can't come up here. And the tariff with Brazil remains intact, so that's made Brazilian beef coming up here more expensive. That's one reason we've had higher prices. So, yeah, they did make the comment about Argentina, and that seems to be what was enough to make us turn. But when you really dig into the numbers that are coming up from Argentina, that they don't really solve the problem that we have. Where basically our herd's too small. So good opportunities here. We'll see if we can continue to rally and fill that gap. And then the lean hogs. I'm going to finish up with that. These lean hogs finished down about 70 cents. Made a new 4-month low. It's trying to find some footing here at this 80 cents level. That's also extremely technical. If you take the April tariff scare low, which was just under 67 cents, we topped out at the end of September there at about 91. If you look at that big movement, this area here, this 80 to 82 cents, has been very, very big technically. And looks like the robot stepped in there and bought some here today. Can it go lower? Yeah. If you had hedges on that doubled or tripled in value, make sure you're taking profits on those hedges. Don't lift your hedge. I'm not going to sit here and tell you it can't go lower. But you do want to pull money off those hedges if it's at all possible. All right, that's it. This is Chris Robinson, Robinson Ag Marketing, 312-638-8868. I hope what I share with you helps, and thanks for tuning in.